Good morning, everyone. Welcome to LeapMeet 100 technical analysis and interactive Q&A session. Um, it's a long weekend, so we're going to try and keep it short and sweet. Just go over some of the names that we usually trade and see where the market is. Just quickly, though, let's see what type of data we are coming out. So coming this Wednesday, April 12th, we have core CPI coming, core CPI data coming in, which is, as you all know by now, very, very important. So on Monday and Tuesday, as usual, expect market to pretty much trade sideways after first couple hours or so of volatility. I would not expect it to make any big move in either direction, just because in anticipation of core CPI, we have learned this last week as well, which were some of the inflation-related data when it was coming out, market usually moves sideways, and we have seen this happen over and over and over again. So keep that in mind as we trade this coming week. We also have core PPI number coming out, producer price index on Thursday, which is also a very important, not as important as CPI, but it's still a very important number related to the economy. So keep that in mind as well. And lastly, on Friday, we'll have retail sales data for U.S. market coming in. So that will be another data point for us to keep in mind. But out of all those 3 days, Wednesday is the most important day, and it will set the tone for rest of the week. So keep that in mind as we are trading on Monday and Tuesday. Don't overtrade. Don't keep your profitable positions opened. Learn to take small losses, which is very, very important. If you can't take small losses, then those small losses are going to turn into big losses, and which will wipe out all your profit. So keep that in mind as we trade going into next week. Let's take a look at the S&P 500 index chart, SPX, that we usually trade. This was the day where it all started. March started the middle of the day, and since that day onward, market started moving up and followed this really nice uptrend. As you can see, the same thing happened back in January. Pretty much about the middle of January 19th, market started trending up in this trade, and this trend moved sideways and then slowly started coming down all the way, going back to 3,800, where it started another uptrend. So as you can see, market is sort of moving sideways at the moment. So if you zoom out and look at the bigger picture, you will see that it's pretty much moving sideways, whereas this was moving lower. Long-term downtrend has been broken though, which is a good deal, which is a good thing. But short-term, it's a sideways move. So what we are going to do is basically we're going to take it a day, a week at a time, and just see how it's moving. As once this trend is broken, I would turn a little bit bearish on the market. If it managed to break above 4,200, then absolutely bullish, and everything should start moving higher. And that may not happen Monday, Tuesday, but if the numbers for core CPI are aligned with market expectation, I can absolutely see this blow past 4,200. So keep that in mind as you're trading. 4,200 is a big level. It failed here. It failed a couple of times here. When it did break over, it went all the way to 4,325. Big deal. All three moving averages, as you can see right here, 50-day, 100-day, and 200-day, they're all moving up now, slightly curling up. 50-day has been moving up quite sometimes, 100-day also, and 200-day is pretty much sideways, slightly curling up. So the momentum right now is bullish. if you have preconceived notion like market has to be this way, market has gone up so much, it has to come back down. Um, Economy is bad, this is bad, that is bad right now, inflation is coming, recession is coming, whatever it may be, right? Charts don't lie, biases do. That is one thing you need to remember. So looking at the chart, if it tells you that current momentum is bullish, you have no reason to bet against the market. It's as simple as that. Why are you betting against the trend? Why are you thinking that, oh, because it's so up, it's going to go down? You always hear me saying, what's up can always go higher, what's down can always go lower. So let's not have biases. Let's just focus on chart and what it's telling us. If it's telling that current trend is up, yeah, it is up. It can continue to move up to all the way to 4,200 and plus. If the trend is broken, then chart is telling you that, okay, the momentum has shifted and now it can move lower. So trade with it. Trade with the momentum, trade with the trade with the market. Don't project what your thoughts are of how things should be onto your trading, because that is the sure short way of saying that I don't care about the whole market. I just want to gamble because I have a feeling that it's going to go down. You, me, any other retail trader, we are nothing. We are a small fish in a huge ocean that is that stock market is. And that ocean is full of sharks and predators. We are nothing but a fish. If we want to survive, we have to look at things objectively and with without any biases and do what it's telling us to do. Otherwise, your $10,000, $20,000, $30,000 account is going to wiped out by someone who has a million, 2 million, $1 billion hedge funds accounts. You, me, we're nothing compared to this. We're nothing compared to what those big players could do and how they can manipulate market. And trust me when I say it, they are thinking 10 steps ahead of you. They are not betting, they're not trading in the market for today, tomorrow, or 1 week from now. They're trading market 6 months from now, 3 months from now, a year from now. So what you and I think is irrelevant. So that is why technical analysis is so popular, because there is very little they can hide in technical analysis. News cycle, it's all garbage. That is why technical analysis is the king, in my opinion, especially if you want to trade with the trend on a shorter time frame. Right? So longer time frame, nobody knows what's going to happen unless you are the one controlling the market. Then you know what's absolutely going to happen, unless you are a big politician who has connection of the things that are coming in the pipeline. So things like bills that are coming down 3 months from now, you prepare for it. You're like, okay, they're gonna block this shit, so I better short this stock because it's a negative news. Or, oh, they're gonna allow oil pipes to go this and that, whatever. I'm just giving an example. And you bet on the oil pipe. But because you have that prior knowledge of things or events that are coming down the line, you can do that. You and I don't know anything. So focus on what's in front of you and stop predicting the future, because I tell you, you have no idea what you're messing against or what you're betting against or what you're trying to compete against. I've been doing this for 13 years, so I know how to survive in this market. And that is one of the single most important piece of advice I can give you. Trade what's in front of you. Anyway, let's move ahead. We're going to go to Apple. Again, nice uptrend on 50 days, 100-day, 200-day SMAs are curling higher. We do have this nice uptrend right here, as you guys can see. So we are going to see what can be done with that. Let's draw some level on the upside. First and foremost level is going to come right here. That is this resistance level where Apple has failed a couple of days ago, where it was at almost at 167. Break over that. The next resistance is not until 169, I would say. So that's going to be the next one. Over that, right here at 171, over that. The minor resistance on a daily chart is right here at 173.50. So those are the level on the upside. The downside level we already know. Overall bias and overall short-term bias in Apple right now is bullish. It can continue to move higher, but again, all this level and everything we talk about today may very well be irrelevant on Wednesday when we get the CPI numbers. So keep that in mind. Don't overextend yourself and just bet big. Respect your stop losses. But those are the level I'm watching on the upside and downside. There's nothing unusual, strong uptrend, just like what happened back in June 2022. All the way to 176, and that's where it failed and went back down all the way to 134, and then again almost to 125, and now it's up to 164. Overall bias in Apple is bullish. It hasn't, like, if you look at the chart, like it's still, this is the March 2020 low, so that's one way you can visualize a stock's relative strength is compared against where it was back in 2022 when we had the real bear market. It was at $53. Now, even with everything that's going on since pretty much 2021 December, entire 2022 and a half of 2023, it hasn't tanked as much, and every single opportunity that it get, every single bull run that we get mid-cycle, it's trying to go right back to right back to all-time high, which is at 184. Like it's right here. It's just like going and going and going. So overall bias is bullish for Apple for sure. So keep that in mind. Now, if we're gonna do the same analysis, so let's take a look at the March 2022 lows for right here, March 2020 lows for Amazon were at 81. It touched those lows not too long ago, and see where the all-time high is. So we are way off of all-time high. So that is why overall trend is still on the downside in Amazon, as you can see. Let's draw a trend line. So that is connecting the maximum number of points. It did try to break out of this trend line, failed, tried it again, failed again, tried it again, failed again. Actually, I'm gonna adjust it a little bit. That's it. That is more relevant. Okay, there we go. 100-day SMA, super low. This is the 200-day. 100-day is also, it's moving sideways now. 50-day is finally curling up. Overall trend is still down. Let's see what else. It is sandwiched. It is over 50-day and 100-day, but right below 200-day SMA, which could provide a very strong resistance for Amazon. So keep that in mind. 107 level is going to be very, very important going further into this week. 104.25 is going to be another very strong resistance level. So watch that on the upside. So 104.25 and 107, two big level on the upside. If it managed to get over that, then it can run to 112, which is where we'll find the trend line resistance. On the downside, 50-day and 100-day SMA should provide decent support. So the level I would be watching on the downside, obviously, currently it's a 102, so 100 solid round number support level. Break below that, it will be 50-day SMA support level, which is a 98.50. Break below that, the next one is at 95, which is from 100-day SMA level. Short-term trend is slightly up, but again, giving Wednesday the core CPI data, we don't know what's going to happen, but this 107 level is going to be a big number to watch out for. All right, Google, let's take a look. March 2022, all the way to 51. It's currently at 108. So decent, not as strong as Apple, not as weak as Amazon anymore. It is moving sideways and now finally trying to break out. If you have seen Google trading in last pretty much about a month or so, its range is ridiculous right now. It moves like $4, $5, $6 on the downside, $4, $5, $6 on the upside, like it's nothing. So with that amazing range comes a lot of opportunities. So that's why you will need to be on the lookout for those opportunities. Google is over all the SMAs now, which is a bullish sign. 50-day SMA is pretty much moving sideways, slightly curling up. Same thing with 100-day. 200-day is flattening out now. The big support level on the downside for Google is going to be 99.85. Big resistance level for Google on the upside is going to be 111. That's where I would put it at. So watch those. That's where it has failed many, many times before. Right here, again here. That's the same level that provided support multiple times before as well when it was trading in this range. So keep that in mind. It could very well fail at 111, breakable over 111, and things starts to move faster. Next big ticket resistance is not until almost 119. So this gap can be filled within a couple of days. So keep that in mind. If we see Google break 111 on Monday, if CPI numbers are well aligned, then this range can be broken on the upside. So those are the two levels I'm watching on the downside. For the upside, for the downside moves, obviously 200-day SMA is going to provide good support at 101.35. Break below that 99. 100 is going to be a super strong support for Google as well. So keep that in mind. Overall bias in Google is bullish. Tesla, to be honest, I'm completely avoiding it right now. Maybe on a good day or a bad day, we would trade it, but I'm not going to analyze it because this doesn't make any sense to me. Analyzing Tesla on a yearly time frame doesn't really mean anything because Tesla is such a news-driven stock that one big news or like good or bad can change direction and momentum in split seconds. So we're not going to spend too much time on it, to be honest, because it doesn't matter at the end of the day. 50 days curling up, it is sandwiched between 200-day and 100-day SMAs. So, and it's been moving sideways for quite since pretty much since February. So it's moving sideways on the upside. 207 has been provided good resistance in the latest uptrend. It has provided resistance before. It has provided good support before as well. Actually, now I'm going to put it at 206. That's the right place to put it. That's where it was support. And that's where it has provided resistance multiple times. It has tried to break out, and every time it tried to break out, it can go to 210, 211 very easily. So that's where we're going to put the next level at. And break above that, it can go to 218. If Tesla managed to break over 218, then it will turn absolutely bullish. Right now it's at 185. Overall momentum is on the downside. So the current bias is bearish. So keep that in mind. But as you can see right here, right, like a couple of good news and it's just blast off. So Going into next week, what I will be watching first and foremost is for it to recapture 50-day SMA, which is at 192.25. If it can manage 192.25, 200 level is on the card. If it manages 200, then 207 is on the card. So those are the level I'm watching on the upside. For Tesla to move on the downside, we'll be watching 178.50. If it breaks below that, then the 100-day SMA support level is at 170, 190. So that's like I'll put it at 172. Break below that, the big resistance support level is not until 165. So those are the level I'm watching on the downside for Tesla. Tesla earning Wednesday, April 19th is coming as well. So keep that in mind as you are trading. If you have equity in Tesla and want to book some profit, keep an eye on it. It could run ahead of earnings like it has done before. Right here, it ran over it. So that is also possible. So keep that in mind. Drops, take some profit, and then wait for the other one. NVIDIA, this is a monster. And NVIDIA is doing this monster run on the upside mainly because of what's going on with the AI, right? So March 2020 level was 46, almost 53. Right now is at 270. Huge up, hugely bullish. Went all the way to 350 earlier, all-time high. Big time resistance is coming in at 289. Overall trend is strongly on the upside. Now you can pretty much draw it like this. There we go. So overall trend, if you discount for this smaller trend here, overall trend is on the upside. It did pull back to the trend level of 263. If it breaks this trend, the short-term pullback could happen towards 258 and possibly 250. 50 days strongly up, 100 days strongly up, 200 day is also moving up. Everything is screaming bullish for NVIDIA right now. So that's what I would be focused on. Any red day, until it changes the direction, is an opportunity for me to go long in NVIDIA. Options or stock doesn't matter. I will be looking to cash in on it. This is what we talked about last time. Last time, if you guys remember, when we talked about it, NVIDIA was right here somewhere, and I'd said that if it breaks over 250, it can run up very high at least up until 170. It defied my expectation, went all the way to 280 now. So that's going to be another level to watch out for on the upside now. But very strong trend, very bullish on it. Everything is pointing for that until we get the earnings. So let's just say on Wednesday, core CPI numbers are bearish and market starts to tank. Which stock would you be looking at? I would be looking at NVIDIA. I would be looking at Apple. I would be looking at Google. I would be trying to see where it stops. I'll try to see where we find the support level. Once we have confirmation of the support and consolidation, I would enter on the long side in those names because there is a lot of upside left in these names. Currently, it's at 350. There's the all-time high is at 370, so at least 350. So there is another almost $80 move that can happen in NVIDIA. And if that happens, then it's going to be a monster. And if you guys remember, I have been saying this since we started hearing about recession talks. And I was saying that because some of the industries are recession proof. Computers are going to be made, cars are going to be made, all these electrics components are going to be made, phones are going to be made. All these things uses microchips. Without microchips, it's nothing. That's why prices of used car, price of new car, price of computer, all were super high because of the microchip shortage. NVIDIA is a big player in microchips. So the demand for microchips is not going to go away because we're in recession. It will slow down, yes, but it will still be there. If you're producing 100 microchips a day, for example, and current demand is 200 microchips a day, you're doing very well. You can maintain your price, you can do whatever you want. But now, if recession comes and that 200 a day demand goes to 150, it still doesn't change or affect your bottom line as much because you can still only produce 100. Your all 100 that you produce are still going to be sold. You're still going to make money. So the demand going from 200 to 150 is not going to change your bottom line. People usually fail to understand that. And that is why I said that microchips are such a recession-proof environment and I mean, sorry, product, that it's something to keep an eye on, especially if you're trying to diversify your portfolio. This is the name you should have in your portfolio. Anyway, big run from almost 100 to 270. That's 170 point jump in matter of months, like even less than a year. That's pretty impressive. And if you listen to me, you probably would have banked on it. I am in it with my average is 147, so I'm nicely up on it. Anyway, so that's what's going on with NVIDIA. Meta, another name that is finally breaking out of this trend line. The overall trend is strongly up, as you can see now. All 50-day SMA is strongly up, 100-day, 200 days finally flattening out, 100 days already moving up. Overall trend is on the upside, as you guys can see. So let's draw some important levels here. So those are the level I'm watching on the upside. So if Meta continue to trade in this range, the next one is at 219.50. Over that 219.50, over that it will be at 224. Over that it will be at 230. Pull back to this trend line is possible. And those would provide good opportunities. So the level I'll be watching on the downside first is going to be right here at 208, break below 208, and we can see 205.50. That's where the trend line support will come in picture. If that breaks, the next big support is not until 109, 197.60. So keep that in mind as you trade Meta. Those are the level I'll be watching on the upside and downside. Overall sentiment right now is bullish, so more calls than puts, depending on the day though. Another name, Microsoft, very nice name, pretty much moving sideways compared to March 2020 lows. It was right back at 135. It's almost at 300 now. Strong resistance level is coming in at 294, so keep that in mind. It could fail there and pull back. The ideal entry point is going to be somewhere around 275 for Microsoft, especially if we see a big pullback on core CPI data. 50-day is strongly up, 100-day is strongly up, 200 days finally curling back up. If it managed to break over this 294 level, let's draw some support and resistance here. The big one is at 305. That's where it failed before. The minor one is also at here at 299. So that's the one I'll be watching over 294. Another one is at 310. Another one is at 315. Another one is right here, 318, 323. All right, so those are the level I'll be watching on the upside on daily. Intraday levels I usually like to draw every day on my chart. So that's why I'm not drawing it here because it takes longer. I spend usually 2-3 hours a day charting on my chart. So big on the upside, again, to recap, 294, break over that to 300. Those two levels are very, very important. On the upside, pull back to 283.50, break below that to 281, break below that. We can see it go to about 275, break below that. We can see it at 269. Those are the level I'm watching on the downside in Microsoft. Netflix pretty much moving sideways, not very interested in it. It has a lot of fake out tendencies, and it has burned me lately. So I'm not going to really look too much into it unless there is like a very strong uptrend or downtrend. When it moves, it moves. So that is why I like to keep an eye on it, because if Netflix opens $7 up, there is a big chance that it's going to hold on to that level. So if it goes down, I'm buying bulk calls, things like that. I have my theories for Netflix, which is how I trade. 200 days moving up, 100 days moving up, 50 days scrolling sideways. This 334 support level is going to be very important. If it breaks below that, the next support is not until 322. Break below that, now the next big support is not until 313. So those are the level I'll be watching on the downside. On the upside, first and foremost, it has to get past 342, break over 342, 349.50, and break over 349.50. At 350 obviously is a solid number, so that could provide some resistance on the intraday. Over that, it will be at 357. So those are some of the names that I'm watching, the names that we usually trade. If you guys have any question about anything else, please go ahead and post it in the chart request room, and I will try to post a chart as soon as possible. Anyway, those are the things that I wanted to talk about. We are going to, if you guys have any question, feel free to post it in the chat now or try to unmute yourself. If you guys don't have any question, we'll go ahead and end the webinar here. All right, we will go ahead and end the webinar here. Thank you again, everyone, for joining on this long weekend. We really appreciate your support, and I will see you all tomorrow. Have a great day.